Let me introduce our guest. He has delivered more than 1,000 keynote speeches in about 26 different countries on issues related to estate planning, and he's here to have a coffee with me. I keep saying coffee. I don't drink coffee. We'll ask him if he does. But anyway, but to have a chat, because we have experienced so much uncertainty in this past 12 months or so that many of us are really looking to generate a little bit of clarity about our future, especially about the future of our farm businesses. So it's my pleasure to welcome to the screen Dr. Tom Deans, somewhere hiding in the background. Wow, look at that. He magically appears. Hey, Tom, oh, you got your mug. What is it?
I have coffee, and it's black. I'm a real coffee drinker.
Okay, well, I think it's funny because my dad, we grew up on the farm, and Dad always had back troubles, and somehow he was able to connect his back trouble to caffeine. So by the time I was old enough, my parents never had the coffee pot on, and so Dad had something he called a cup of swill. It sounds horrible, and it probably was horrible because a little lemon juice and a little bit, even put a bit of vinegar in it. It was a horrible thing. So I don't drink coffee, not because it's bad. I just never developed a taste for it. So, hey, we're really glad to have you with us here. Normally, we'd be in front of a live audience. Well, we are in front of a live audience, but I mean in a room, and you'd hear a big round of applause for you joining us. So just imagine that that's happening because it is. So before we start, by the way, do you prefer Tom, Dr. Deans, or you don't care as long as we don't call you late for dinner?
Call me Tom.
Okay, that's what we'll go with. Okay, Tom.
Awesome.
Before we get to the serious questions, here's a silly question, but tell us something about Tom Deans that none of us knows and none of us could find in a Google search.
You know, I am, what I do is very public, and I'm joining you today from the middle of a forest in the beautiful Hockley Valley, just north of Toronto, outside of Orangeville. And what people don't know is that I have 4 dogs. And I've had upwards of 5 dogs. It's a little bit weird. I mean, people think, you got a problem. I love my dogs. A lot of people don't realize, but what I do is very public. I come back up my long driveway into the middle of a forest, and this is where I kind of hide and write and think, and then head back out into the road when I used to, right? You opened this session by saying, isolation is hard. It's hard. I mean, I'm a public speaker, and I've been forced to kind of sit here and kind of connect with people who I know are struggling like never before, both individually and as families. So I know that today's topic is super, super timely and important.
Okay, so we're going to try to cover the 6 estate planning ideas that successful farm families master. So just quickly, give us a bit of roadmap of where this conversation is likely to go.
Yeah, so let's talk about the 6. I mean, a couple are obvious, but a couple are a little less obvious, including the one that I would like to open with, which of course is healthcare. Taxes, everyone knows, is a part of estate planning. Litigation, we just have to read any newspaper there's almost always a family in the news that is fighting, if not over a farm, over, I don't know, over something, over some kind of operating business. Communication is a big part of estate planning, as is planning. We're going to get into that. And lastly, governance, which sounds very formal, but governance is really the meat and potato, the documents that we need in place to make sure that our hard work, our farms transition smoothly at low cost, and so that is really how we want to be remembered. We do a good job on these 6 things, man, this hour that we're going to spend will be well worth it.
All right, and we're going to speed through this pretty fast, so don't worry if we're chatting too fast that you can't take notes fast enough. We're going to pack in as much as we can into these next few minutes. So just remember, it is being recorded, so you can watch it back at your leisure. So don't sweat it if you miss a particular point. So you mentioned health was number 1. This is not really a health question, but I'm going to use the word health to start this off. What words would you use to describe the current health of the whole wills and estate planning process statistically in this country?
Well, without being overly dramatic, a complete disaster.
Wow.
I mean, really,
That's fairly dramatic.
12 million Canadians without a will. I don't know anyone who has a power of attorney or a healthcare directive who doesn't have a will. In other words, we go in for the will, we come out with those two other bonus documents. And so we really are in really not a great place, particularly as we look around in the middle of a pandemic. Yeah. If we don't know someone who has been tested positive for COVID, there are just tens of thousands of Canadians that are being touched in a very personal way. We need, like never before, these healthcare directives. If we have a parent, I have parents 86 and 80, if they end up on a respirator, thankfully, because I practice what we preach, I have a copy of everything I need to make sure that I can swoop in, my brother and myself, and serve my parents and execute, their best interests on behalf of them. So estate planning isn't just about old people dying and getting, dividing up your stuff. It's very much about the people on today who are living, who may be touched by this pandemic. Estate planning is very much about the living.
So why would you say, is there a reason that health is the first of these six that we're talking about?
Yeah, I think it really grabs people's attention. I think there's a reason why 12 million Canadians don't have a will or a power of attorney or a healthcare directive. And that's because the subject feels a little scary. It feels a little finite and dark and sad. And so people, and by the way, this subject is full of Latin, full of million-dollar words that intimidate. And then people just don't want to feel like they don't know what they're talking about. And so they find a reason, an excuse to procrastinate and not visit their lawyer because they don't want to feel silly when they don't know what a testator is. We can do better. And what I want to do, if I do my job well today, I will try to break this down in plain language to get people, I'm actually going to put this out here, actually excited and feeling like they can do this and not intimidated and take one step to get these documents in place. And if we can do that, man, as I said, this is an hour well invested.
Isn't it interesting? You're talking to a group of farmers. I mean, I've farmed with my dad and my father-in-law as well. And so we do a whole lot of things really well when it comes to risk, right? We have market strategies that we use to manage the risk of price volatility. We have insurance products that we buy to deal with the risk of crop or, fire damage. Isn't it interesting, though, from a standpoint of risk, I would say seldom consider the risk to the business if I'm not taking care of my health and I drop dead suddenly. If I, haven't planned for a power of attorney for health or for property. What are some of the key messages here that we need to sort of sit up and pay attention to regarding health?
Well, I love the way you phrase that. I mean, we think of risk as like fire and floods, maybe hurricanes, maybe tornadoes, right? Weather, or market conditions. I am not, seriously, I don't want to be overly dramatic. The single biggest risk is dying intestate, dying without a will. The cost, the delay in administering an estate because someone did not take a couple of hours just to document properly, not by taking shortcuts, but with a proper lawyer, how they want their life's work. No, their grandfather and their great-grandfather's life work transitioned smoothly to the right people at the right time, in the right way. That is the biggest risk of all.
Okay, let's, I'm not sure how much time we need to, attach to each of these subjects, but I know the time will just speed by really fast. So we'll probably skip through them fairly fast. And if we do have some space at the end, we'll maybe go back and say, hey, I want to reemphasize this. Let's move to your second one, and that is about taxes, which is, of course, everybody's favorite subject. I used to kid my father-in-law a lot that, that's basically what he would do is farm to avoid taxes. What are some of the big tax mistakes that we can avoid?
Yeah, listen, this is a national broadcast, so obviously taxes can get broken down into different geographies, different provinces have different laws, different regulations. But there are some big themes that cross the country, and that is, obviously, farms are treated differently in terms of capital gains and real estate, but there are certain asset classes that are subject to capital gains. And the first mistake that people make is just not getting good professional advice. I mean, not every accountant focuses on agriculture. Not every lawyer specializes in agriculture. Like, you know, you wouldn't buy insurance from someone who, you know, doesn't have a detailed knowledge of agriculture, right? Farm insurance is a very specialized area. Same thing with law and taxes, like getting good advice. Taxes constantly, just like estate law, constantly evolving. And so it's just not one of those areas you want to be kind of a do-it-yourselfer. The big mistake, of course, is a lack of liquidity, just a lack of liquidity by the next generation to cover the taxes that have been triggered by parents who last to die, right? And so often when we revisit that shocking statistic that only 30% of family farms will transition successfully to the second generation, and only 10% of those will make it to the third generation. So if we've got some first generation farmers listening, we got a 3% chance of their grandchildren owning and operating the farms. Like, that number goes down, down, down. And a lot of that casualty is a result of liquidity. By the next generation to have working capital to either buy out brothers and sisters, to get the farm into the hands of the people who are both capable, passionate, and willing to take that farm and drive the innovation that is required to continue to make that farming operation profitable.
What are some of the strategies that I don't know if I can use the word endorse, but to defer tax? I mean, there's incorporating, there's estate freezes. Do you recommend any of that?
Well, I certainly do. I certainly do recommend incorporation. Obviously, it limits liability. There's lots of material available from FCC to talk about the benefits of, incorporating. But I just think the real benefit is by having real structure, right? Real set of rules for family when they're involved in a corporation. You have shareholders. You can issue dividend. You can keep wealth inside that corporation and meter it out. One of the biggest mistakes that farming families make is that they actually keep too much wealth in their corporation, which of course makes it hard to transition a big lump sum at the end of death. So one of the things that I talk about in my books is this idea of the use of family meetings and starting to look at the transition of wealth in fairly small amounts and fairly irregular when their children are young. But when we start to transition money at an early age, we can start to coach. We can start to provide training and feedback on how they're using those small living gifts. And that can actually inform much larger decisions about whether or not the next generation should be farmers, right? Because not every next gen should be. Some are really well equipped and others less so.
Okay, I'm going to get ready to move on to the next one, but is there anything about taxation that is key to this that you wanted to touch on before we move on?
I think that we've got a lot of ground to cover. I think that certainly captures the high level.
Okay.
Yep.
Okay, so let's move on to litigation. This one is awkward. I guess that's the best word I can give it, because if we're really honest with each other, the truth is we work with family, we do Thanksgiving with family, and we think we understand family. But at the end of the day, and I don't want this to sound really negative, but money makes people mean. And I feel like a lot of us don't feel like but that's not going to happen in our family. What are your thoughts on how to avoid the mess of litigation?
I think of all the different industries and sectors that I speak to, there is no more complicated structure on the planet than a family farm to transition. It is the intersection of money, of control, family relationships, love, emotion. Like, seriously, it is a cocktail of confusion for most people. And every farming family that I've talked to always feels like they're the only one going through that. Like, this is from Asia to Central America, all the way across the prairies. Like, every farming family wants the best for their children. We don't invite our children onto the family farm because we don't like them. We want them to succeed. Sure. And yet we struggle with how we prepare the next generation to be good savers, make smart decisions, do what farmers do best, which is defer consumption for a rainy day. Like, we're great planners. And that all feels overwhelming and confusing. And often we take the subject of money and the family farm and we wrap it in silence. And then the next generation misconstrues and misinterprets that silence for mom and dad don't like us. They don't believe in us. And that could be the furthest thing from mom and dad's idea. And so they just don't know how to start the conversation. And I think that's what we're trying to do today, right? We're just really trying to give people the confidence to take that first step and just start the basic conversation about how that farm is going to transition. Because it is. It's going to go somewhere. And it's going to go somewhere. And hopefully there's a big idea behind it, an inspiring idea.
Okay, let me just change the pace here. I'm going to read a couple of statements that could have litigation ramifications and just get your reaction to them, okay? So first statement here, I don't need a lawyer to take my money to write a will. We're family. We understand each other. We have an understanding. What do you think?
I'm a lawyer, and trust me, if you don't want to give me money to write a will, I'll take a lot more of your money if you don't have one, because I'll whip your family up. I'll get one of your kids to lawyer up with me, and then I'll send a letter to one of their siblings that says, we want it all. And then they'll send a letter back saying, no, you won't. And I'll send another letter and so on and so on. And guess what? We're going to take that beautiful farm and we're going to grind it to zero. Lawyers take instructions. Lawyers are not planners. I mean, part of what FCC is doing today is helping people understand that we are responsible for our future, for our plans. We need to go to our lawyers and tell them what we want. We often get the family transition that we fear, not the one that we want, because we are so afraid to take the first step, to get our wills written, to have family meetings, to get input, to ask questions, to get a family talking and thinking together, and then writing those documents so that the transition right? It happens smoothly at low taxes in a timely way that keeps the litigation at bay.
Okay, next statement that has litigation potentially ramifications. I'm not drawing a salary from the farm because I expect to inherit the farm. Yeah,
you know, boy, you're cutting right to the core. I know most of the first unpaid employees in a farming operation are young children, right? And those young children move into their teens and they're often paid below market wages. And then they move into their early 20s and 30s. And often those wages haven't kept pace. And then one day those children gain the courage to broach the subject with their parents. In other words, complain about how much money they're not making. And then they hear something. They hear something actually really dangerous. Their parents will often say, relax, don't worry. One day, all this will be yours. And do you see what just happened in that moment? We've set the expectation that someone is going to get a farm for free. Now, there's no clarity on when that day is going to happen. In fact, if we really want to step back, we know that Canadian farmers are living longer than their parents and grandparents. So that transition of that farm won't necessarily happen at age 68 when dad used to have a heart attack back in the 1950s. Now that farmer's having a heart attack in their 70s, getting a stent, running 4 marathons and dying in their 90s, and their kids are getting the family farm when they're in their 70s.
Yeah.
And there's been a lot of resentment from age 25 to age 70 on when they're going to get the farm and actually get control and make the decisions on how to modernize and innovate the farming operation. A lot of frustration along the way.
See, your statements raise a lot of interesting points, and we can't get to them all. But one of them is, I suspect, because you're the expert, I'm not, that in some cases litigation stems from entitlement. What, in your opinion, we're talking about wills and all this kind of stuff, what do parents actually owe their kids?
I think what parents owe their children is the right to be paid a market wage for the work that they do. And it's not just a right, it's actually smart business. Because if there's a gap in the labor rate, what the next generation often think, and you'll know what I'm talking about, when they say, I've earned this business. Like I've got, it's sweat equity. Have you ever heard that expression, sweat equity? Yes. I raised it with my accountant recently. I said, could you just give me a definition of sweat equity? And they're like, what? What are you talking about? It is a It is a made-up idea, but that is the concept that describes why children often work below market wages, because they believe that they've earned it. Now, you know and I know that real estate prices have gone up, the value of farms have gone up, and I did a quick calculation that one farmer who was paid below market wages was actually, his sweat equity when he got his family farm for free was actually working for $8,000 an hour. The farm, wow. No, don't take any shortcuts. Just pay a market wage, and then don't confuse employment income with equity. They're completely different concepts. And
Good
it's
advice.
Really hard to untangle them once we mix them up.
I like the sound of that. Good clarity there. What about this maybe potentially litigation topic? And that is the owner or the farmer has made the decision to not will the farm to the kids. They either sell it outright or maybe they will it to a grandchild. What's your take on that?
Well, certainly willing it to a grandchild, in other words, skipping over their own children is a big problem. And it's a big problem not just in farming, but it's a big problem across every sector. And it causes, as you would imagine, huge tensions and litigation between parents and their own children, right? You imagine your parents jumping over top of you because maybe the grandparents have looked at their own kids and say, well, they're set. They go to Cuba. They've got new cars. They have more than we had when we were in our 30s or 40s or 50s. So we're going to give it to the grandkids. In other words, they equate estate planning with economic need. And oh my goodness, the lawyers love this. The lawyers love when grandchildren get farmed and their parents are cut out of wills or disinherited. It is a big problem that seriously undermines the parent-child relationship between G2 and G3. Not well advised. What's better is a family meeting with all three generations present and grandparents, transitioning the farm through their children with the express intention that it will travel ultimately to the grandchildren in the fullness of time. There are kids that are receiving shares in farms who are minors. Yeah, and they turn 18 and they're getting farms worth tens of millions of dollars at 18. Can you imagine that? Can you imagine what an 18-year-old with a $10 million farm looks like? I know what I was doing when I was 18. It wasn't pretty.
No. So maybe to wrap up this part of the discussion, because I think that at the essence of a lot of owners, a lot of parents is they want to treat their kids fairly. And we just don't know how to do that, right? And so what is the difference, first of all, between fair and equal, and which one are we aiming for?
Right. So let's take the farming example where we have one sibling on the farm, another sibling off farm. You can see the temptation for mom and dad in their will to leave the farm to the child who is in the business because they've got sweat equity, they've built the farm, and they will leave. Often they will say that they will leave something of equal value to the sibling off farm. The reality is different assets get taxed in different ways. So there are different scenarios. For example, someone gets left a cottage that gets subject to capital gains tax. The cottage could be worth the same as, cash in a farming operation. One gets taxed and one doesn't. Right? So this is where advice is really important. But not only advice, but family meetings where whatever is being planned is discussed, is being communicated and shared so that when parents die, and they all do, including me and including you, Kevin, when that happens, that the living don't project their anger or their dissonance or their aggrievement on their brother or sister. They understand who made those decisions and why they were made, the logic and the context behind those decisions. Surprise, continues to be the hallmark, the touchstone of most estate plans. Kids are learning about what their parents' transition plans are for the farm on death. Yeah. Not at the lawyer's office, at the funeral home. Because at the funeral home, the funeral directors are asking who the executor is, because the executor has the legal authority to implement final wishes. Well, guess who that is? That's often one or all of the kids, right? and they get a copy of the will, and then they read the details. And that is how the administration of mom or dad's will gets started, with someone learning that someone got the farm and someone didn't. And they're grieving.
Okay, so that really, it's a beautiful, yeah, and that's a beautiful roll into where we have to go next. Is I think your fourth item is communication. Isn't it interesting how I'm going down through your 6 items, and yes, there's taxes in there, but most of these really key things are actually soft issues. They're not the hard issues, which is interesting. So communication's clearly one of those things. And I get everybody, if we were to poll everybody in our virtual room right now and we'd say, everybody would put up their hand, is communication important? Well, yes, it's important. But then I think just about as many will put up their hand when it comes to having a meeting with the family. It is more like shark-infested waters, right? Because it's awkward. It has images of emotional outbursts and so on. So how do we go there? How do we have communication, at least that first family meeting?
Right. So we all know that 80% of communication is nonverbal. So often when, say, a sibling says to their parents, I read a book, or I just heard a webinar, and we really need to start talking about the transition of the farm. And their parent goes, right? And shuts the conversation down or rolls their eyes. Listen, the paradox is that the soft issues, all this emotional stuff, yucky stuff, it is the hard stuff. It is the hard stuff. And the easiest thing to do is just leave it alone. But we know, if you understand the history of farming across this great country, and the growth, the aggregation of farms has usually been as a result of the family that have found a way to not roll their eyes, but to actually work with advisors, with a third party, to talk about the transition. And who are they buying? They're buying the family farm down the road where the family couldn't do it, or didn't want to do it, or couldn't see the wisdom in doing it. And that's how that's how farming operations got bigger, by really preying on more dysfunctional families, right? And so and we're not reading about this, because successful families that meet with their advisor once a year for an organized family meeting to talk about updating wills, power of attorney, healthcare directives, shareholder agreements, corporate minute books, business-like, formalized, mature, no yelling, no screaming, really focused on the future, want the best for their children, want the best for the farming effort. Who wants to read that story? That is boring. We're just going to keep on flipping through the local newspaper, reading about the farm that's, in turmoil, hearing the stories at the local coffee shop and of the family that's lawyering up. Like, seriously, we can do this. And the smart farmers have always done this. We're actually not talking about doing anything new. I just would love to see families just do more of it. Yeah.
So you made it, oh my goodness, you mentioned so many important points in there. But so let's try one of the awkward ones. You kind of mentioned the roll your eyes part of it. I have heard from farmers who said that I tried to bring up the idea that we need to discuss, the succession and whatever of the farm. And basically they said, all my dad or my mom said to me is, it's my farm, it's none of your business.
Right.
How do you get past that?
Okay, so here is where I depart a little bit. I don't know if it's so much a contrarian message, but it's certainly something that I've tried awfully hard to try to connect these two impossible dots. Mm-hmm. For the elderly farmer who utters that phrase, the one you just said, yeah, I would remind them that they are going to live statistically longer than their parents. And at some point, they are going to need the care of their children. Long-term care, health care is estate planning. Yeah. And running around and making plans for in-home care and checking on prescriptions, that is not the work of an accountant or lawyer. That is the work of family. What kind of family? The families that have used their hard work and ingenuity and savings and good fortune to create wealth they've used discussions about that wealth to deepen trust and deepen respect, and that shows up in the long-term care that those parents hope to receive. Do you see what I'm saying?
Yeah,
Control's a funny thing. Control is a very funny thing, and some would argue that the greatest expression of control is the voluntary relinquishing of control.
Yeah.
When we don't need to relinquish it, that is control. And so when we can start to say, I know you're curious about how the farm will transition, and now that you're old enough, I think we should talk about it. But there are some business principles that I want you to understand, that this thing isn't going to come to you necessarily for free, that you would have to purchase it at fair market value. Well, how are you going to do that? Maybe we can start to transition some wealth, but you're also going to have to deal with your brother or sister. We should talk about that and involve them in the conversation. In other words, it takes great wisdom and leadership for the senior generation to understand that silence is the great destroyer of family farms. It's not families that talk about it. It's the ones that are so frozen and immobilized by the fear of what could come out of that conversation that do nothing.
So let's not leave that one comment that you made there about paying market value for the farm. I've heard that comment before too, that I'm planning to buy the farm from my parents. But at today's valuations, you know, I'm not expected to pay full market value, right?
Yeah.
How do you see that?
Great question. Kevin, let's imagine for a moment that we have a farming operation that's worth $4 million.
Okay.
It's incorporated. Mom and dad, owners, controlling shareholders of the farming operation, decide to take out a $100,000 bonus or dividend or salary out of the farming operation. They then, because they have a long history of meeting with their kids and having lots of transparency with their advisors present, say to their adult children, we have taken $100,000 out of our corporation. We'd like to give you each $50,000. By the way, this can be $10,000, it can be $1,000, it can be bigger number. The amount is actually irrelevant, but follow this. So your mother and I would like to give you $50,000 each. By the way, it's a gift. You can do anything you want with it, but also understand our family farm is for sale. Would you like to return that $50,000 in exchange for $50,000 of voting shares in the farming operation? Or do you want to take the $50,000 and maybe start your own farm, buy your own land, maybe move from corn to pork? I don't know, but do you see what's just happened? I mean, the dollar in the corporation that moves out of the corporation and it moves as a living gift, tax-free to the kids, and then maybe comes back to mom and dad in exchange for shares in the farming operation?
Yeah.
That is how we can get farming operations into one branch of the family. If only one of the siblings buys the farm, the other one gets cash, the other one gets the farm. Yeah. And we avoid that familiar movie that's playing in a local theater near you where the family is fighting over this beautiful farm.
Yeah. We've got a couple other topics to get to here, so I guess we've got to leave this topic of communication. But before I leave it, let me create a scenario that we tried to have a meeting. It didn't go well. There were outbursts. It was emotional. Certain people dominated and wouldn't let other people talk, so on. Do you ever recommend a third party be present for this stuff? And if not, that's fine. And if so, who?
Always, 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 always a third party present. Someone trusted, an accountant, a financial advisor, a farm credit transition ag specialist, someone you feel like you've got a level of confidence and trust with. What I have seen as a speaker who is often invited into family meetings to give a presentation like this, there is always a third party present, and it's business-like, right? We're actually creating a new business concept where we're talking about family, but we're talking about money, but there is an agenda and there's minutes, and people behave. Seriously, people behave. I have not seen I've seen emotion, but I have not seen complete disintegration, because the way mom and dad frame the meeting at the beginning, where they talk about their hopes and their desires and their aspirations for the family to work well when they're gone, like setting the tone. It is remarkable. In fact, I've seen by far the opposite, where people come out of their first family meeting and they're going, oh my, why didn't I do this 10 years earlier? That wasn't so hard. It wasn't perfect, but it certainly wasn't the disaster that I was hoping for or thought I was going to get. It actually was pretty darn good.
Nice. So we've got 2 more to get to, and the clock is ticking here. So let's kind of follow that train of thought a little bit about planning. That's number 5 on your list. When do you start?
Today we start planning. Today is the day that if there's only one call to action out of today's call, is that you book an appointment with a lawyer, right?
Yeah.
And you don't have to have all the answers. You don't have to have all the answers. You start with a plan, and the plan is to start, right? And that is just book a date.
Even if our kids are toddlers, like is it that too early? Like, I'm assuming my 2 daughters are going to take over the farm, like, and they're 1 and 3. Now.
Kevin, I'm not kidding. I have been in family meetings where there are kids running around the room. I'm talking in boardrooms and at hotels or golf courses or wherever this business family is having a meeting, kids whipping around the room. At some point, kids stop walking around the room and they sit at the table. People expect me to deliver some magic number where, is the perfect age for kids to be involved in these conversations. It's like, when does a kid learn how to milk a cow? When they learn how to milk a cow, like, it's a different number. Kids express a different interest at a different age. Same thing with the business of farming, the business piece of farming. Kids get there at different ages, but I say they'll tell you when they're ready. And this concept of, well, I don't really want to talk about money in front of my kids, like somehow money is a bad subject. We shouldn't talk. Money should be kept wrapped in secret. Listen, I don't understand that at all. I mean, then we're going to get kids who are afraid of money. They're actually afraid of making money because money equals bad, because it must be bad if we can't talk about it. I mean, the families that can sit their children down in a family meeting and say, you are going to participate today for the first time in something that is awfully important. And one of the rules of this meeting is that we do not discuss what takes place in this room. You are part of something special. It's called this family. And we're going to be talking about concepts. You can ask questions, but please understand, this is important and it's confidential. I've heard that in our family meetings. Everyone can do that. And I just think, and I really would be really remiss if I didn't make this point, that in everything I've talked about, often estate planning and transition of farms never happens because people are waiting for perfection. I don't want to put on paper the perfect farm transition plan or estate plan because next year I'm going to buy a new tractor or buy a new piece of land, or I'm going to wait till everything's perfect. There is no perfect. Life changes. Get a will tomorrow. You can change it. It is easy to change a will. It's called a codicil. It is inexpensive, right? Don't make perfection the enemy of progress. Get something in place. Something is better than nothing, and you can always perfect it and change it.
But what if, you alluded to this, what if a lot of the big pieces of the puzzle are missing? Let's say my kids don't show any interest in the farm, or maybe I'm not even confident that I can trust them to farm, or like, and so when you have big chunks that are missing, how can I do this? How can I make a will?
So if you were to die tomorrow, those big chunks are missing, right? Your death doesn't make them go away. It just means that you're not here to see the chaos and the gaps and the litigation and the fighting and the tax liability. In other words, what I'm really describing is that the great gifts that we can give our children as we get older, especially as we move into our 50s and 60s and 70s. By the way, 50% of Canadians over the age of 50 still don't have a will. Can you imagine, as you get into your 60s and 70s, can you imagine I'm talking about bringing some urgency to this. Looking at your estate, what you've accumulated, and trying to get as good a solution in place. understanding that even when you reach out to your family and advisors, you can always make changes. Even if you've made promises about who gets what, when, and how, understand that those conditions change and wills can change.
And I'm not going to make excuses for people who don't have a will or an up-to-date will, but I'm thinking of it from a pragmatic point of view, because to me, I'm going to argue that the cost benefit of a will isn't clear to me because I've never done it before, right? I'll pay $50,000 for a truck because I've done that before. I get the value of having a good truck, right? And so the value proposition of paying a bunch of lawyers and accountants, it's just not clear to me because I've never done it before. You know, and so I think that's part of it. So my sense on that is, for people who think that way, I feel like when you haven't gone through something, I think of when I built my house, there's all kinds of things that I did myself, but the bottom line is I had a lot of blind spots because I really didn't know what I was getting into. What are the blind spots, that the traps that if we don't do this well or we don't do it at all?
Well, the blind spot is, I don't know if people know this, and this will vary across the country, but the average estate that is super well organized still takes about 18 months to administer. Do you know there are lots of Canadians who feel like when their parent dies, if there's no will, the government has a formula, by the way, for chopping up the family farm, according to their formula. All right, they're going to chop up the barbecue and the canoe along with the farm. They don't care if that farm's big or small, same formula. And the kids think they're going to get that farm like, I don't know, in a couple of weeks, lickety split. Yep. 18. By the way, here's my will. Here's my will. I'm still here. There's a lot of superstition, Kevin. If I get a will, talk about a will, share my will with my kids, sign a will, read my will, I'm just asking for trouble.
Yeah, interesting. We got to get to your 6th point, and the clock is going here. Just a quick follow-up. This is a small thing, but sometimes it's divisive. How do you divide up heirlooms, right? Dad or mom had a favorite old tractor or a favorite, hutch or something, and that can cause division. How do you do that?
Oh, Kevin, you're going to find this a very strange answer.
Okay.
There's a whole school of thought out there that you put a lot of sticky notes under things. You promise things to certain people, and everything's got a little Post-it note under the bottom of the whatever. There is another way. It's actually pretty straightforward that actually solves a lot of problems. You could take a scenario where you have mom and dad. Mom's maybe died. Now dad dies. He's the last to survive. So now there's 2 kids. The very first thing the executor would do in this is very popular in certain wills now, is the very first thing that gets released is cash. Oh. Billy and Mary get cash because Billy may be, I don't know, unemployed, but Mary, she's got like a high paying job. She's a doctor, so different incomes. So with the release of cash, both have the ability to now purchase items from the estate. Hard to divide items like, I don't know, cottages, the gun collection, whatever, jewelry. Difficult to divide assets become accessible when they have cash. Now the executor sells the cottage, they collect the cash, and then gives 50% of that cash back to each of the children. So in a way, one child gets cash, the other one gets the watch at a 50% discount.
Got it. Yeah. Okay. All right.
It works great.
Great. That's really good intel. I like that idea. That's a very fair way to do that. Okay, so what we got the final one to get to. So just a reminder to folks out there, I see your questions are starting to come in. And so I'm going to let Tom deal with number 6, which is governance, and then we're going to start into some of your questions. So Tom, just I don't want to put governance down, but I'll let you just get to the brass tacks of why that's an important piece.
Yeah, super quickly. It's actually what I've already talked about. So governance is really just the word that explains the documents. It's the documents that every business owner, farmer should have, and that is a will, it's a power of attorney, it's a healthcare directive, and it's a shareholder agreement if you have other family members or other key employees as shareholders. So good governance means you've got those documents. They're stored in a place that other people can have access to in case you lose capacity, and they're up to date. Your executor is still alive. Your executor has a copy of these documents. Good governance means good documents that are accessible and up to date.
Okay, we've got some questions here, and I appreciate the folks sending these in. This is some of these we've touched on, but you can definitely expand on them a bit. Here's one. Is it a good idea to have spouses there for family meetings?
Yeah, so here's what I would say. The first family meeting, try to keep it as small as possible. In other words, mom and dad and kids. But as quickly as you can expand to include spouses, absolutely make that a priority. I mean, their exclusion from a family meeting would also send a signal, right? It would send a message. It would set the tone that you're not trusted with conversations about money. And also running parallel to estate laws in every province is some version of the Family Law Act, which gives spouses entitlements. So educate yourself on the law. If you've got some real concerns about how spouses are dealing with money, spending, maybe there's addiction issues or fear of a marital breakdown, don't run from that. Understand it and get good advice from your financial advisor on the use of trust. Trust can be used to protect family assets from breakdowns.
Next question here. We held a family meeting without a third party present to facilitate. Circumstances changed, and now it's time for another meeting. You touched on this already, but it's worth touching on again. How important is a facilitator?
Facilitator is really crucial, really crucial, because they're that person in the room with no skin in the game. They really can keep conversations on track. They can have the agenda. They can listen and take notes. They can capture action items, who has to follow up and do certain things by certain dates. Like, I just find that without that person in the room, there can be some lovely conversation, but not a lot of follow-up. No one really to hold someone accountable that isn't family. So, oh my goodness, for the small amount of money, I'm talking hundreds of dollars, to have someone there to run a meeting. Compare that to a lawyer who will ask for a minimum $10,000 to $15,000 retainer just to review a family estate matter that has gone off the rails. Trust me, a family meeting, whatever you spend on a facilitator or an advisor, accountant, lawyer, financial advisor, is the best money you will spend. Listen, don't bet the farm. This is for all the marbles, really, truly.
Yeah.
This is for all the marbles. You got to get this right.
And some of the points you bring up are so good. And one of them I feel like we need to sort of keep in mind, because I've been through this before with our farms, is that your will is your last message to your family. And it tells them what was important to you, and it also tells them what wasn't important to you. And so those things I've seen in some unfortunate cases where a lot of collateral damage was left behind for the living because either there wasn't clarity or that sort of thing. So really good messages here. Hey, here's a question. I suspect that you've either never been asked this question before, or you only have been recently. How do we have a family meeting in COVID times? Zoom, like we're doing right here, it seems so cold and difficult to read body language. What's your take on that?
Hey, listen, that is the number one excuse for not having a family meeting.
Is it?
Our kid lives outside the province, or there's just no way we're going to get people together. So they wait for that perfect day, which never arrives, and of course, disaster ensues. No, your advisors can do this. They can organize it. You don't have to be a Zoom expert. Let them issue the link to click on and let them organize, a family conversation. It's not perfect, but one of the benefits, I mean, you said isolation is hard. It is hard, but it is not without its benefits. One of the benefits is we have time to connect, even in an imperfect way, and get started with these conversations. And I would actually kind of make the argument that, in fact, it's actually easier to broach some of these trickier subjects from a computer without that kind of I don't know, awkwardness, right? There, you can keep Zoom calls to business, right? We have.
Oh man, we've got these questions here that, man, some of them just break my heart here. Somebody is asking, and I think you've started to touch on this, who are the best facilitators? As a minister, what's your take?
You know, it's someone that I think has a little bit of business knowledge, someone who has some understanding of the complexities of business transition, whether or not they're financial advisors. Listen, there's tens of thousands of financial advisors right across the country. Not all are the same. There's some that have family enterprise advisor designations, like they have taken it upon themselves to get extra education on the transition. FCC has got a farm transition team. Like there are lots of resources. I mean, farmers are really, the best are really astute at really vetting suppliers. They just don't go and buy seed from anyone. They do their research. They talk to other farmers. They do their research. They make good decisions. This is exactly the same. Go out and find someone who's really good at facilitating transition of family farms, and you'll find that person is out there and they want to help. There is no joy in watching a farm family struggle in silence and on their own.
Yeah.
Right? There's lots of experts out there.
We're probably only going to have time for a couple more questions just because we promised to finish at the top of the hour. Just for those of you, if we don't get to your question, feel free to hang around for the Ag Transition Specialist at the end and ask your question in there, because some of these are really important questions. I think that we've touched a bit on this. For the first meeting with family members, what would your main topic or topics be on the agenda? I suspect some of the 6 you mentioned today would be.
I think a great agenda item for family meeting number 1 would be selection of an executor. One item. You could take an hour, couple of hours. You could have your kids, just mom and dad and the kids just saying, hey, listen, your mom and I want to update our wills. And instead of us just randomly picking one of you or both of you or none of you and hiring a professional trustee to be our executor, we thought it would be way smarter just to kick this thing around inside our own family and just weigh the pros and cons. But most importantly, have you guys understand that whatever we decide, we all know, right? So it's like stripping away this surprise, right? And I just think better decisions are going to be made. A family will be better prepared. And there you go. And now the family meeting is off on a great foot. Now you're ready for number 2 and number 3 and number 4. And then they become routine. And it's kind of a little bit, I don't know, a little bit like going to the dentist. The first time you went as a kid, it was terrifying. It was awful. Yeah. Now, for me, I go to the dentist, it's like an opportunity for me to close my eyes and grab it like a nap. It's like it's no big deal. I've been so many times, right? So it's, okay. When we do this thing more frequently, it gets easier. Yeah.
Here's a piece, and I think you've touched on this, but I really feel like we have to touch on this. This actually happened to me. The fellow says here that his dad blew his top when he tried to start a conversation about transition planning. Just even one thing about how do you revisit this when you get pretty cold and distant response ever since then? I mean, that's tricky stuff.
I think for the next generation that has repeatedly tried to start this conversation and implement best practices and use the clock to be well prepared and gets shut down over and over and over. At some point, and this is going to sound like strange advice, at some point, I say to young farmers, there may be no transition in your future. And instead of finding out when you're 63 and your dad is 83 or 93, maybe now is the time for you to grow up and start your own farm and leave the farm. And so there are risks for both dad and child when that lack of conversation ends up in that place. But there's also some pros. There's also some advantages for, going off, as I saw, I use the example of, a pork farmer becoming a corn farmer. Like people have different interests, different passions. Yep. Like there's lots of different businesses in this sector.
Yeah. Well, we've gone over a minute or two, and I'll apologize for that, but this is really important stuff. Two things I just want you to touch on. You do have an online assessment tool. For folks out there that have some not sure about next steps, tell me about that quickly and how it works. What does it do?
Yeah, FCC has access to a tool that I developed. It's called the Willing Wisdom Index. It's a checklist. It takes about 8 to 10 minutes to complete the checklist, and it's confidential. So no last name required. You can put your first name in, or you make up a screen name. Elvis seems to be very popular. No one is looking at your results. Really, it's confidential. Seriously, 8 to 10 minutes to find out where the gaps are in your estate plan. You can then read as much of the report as you want. Use that to help start a family conversation. It's really, really easy. I've stripped out all the $1 million Latin words and made this really accessible. Now you can go to your lawyer, and instead of it being a 3-hour meeting, maybe you're gonna have a 30-minute meeting, and you're gonna tell the lawyer, nice. This is who I want as my executor, backup executor, power of attorney, backup power of attorney, boom, 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 boom. Guess what happens when you have short meetings with lawyers?
You save money.
Tiny bills, not big bills.
That's right.
If that's the only reason you reach out to FCC for this access to this tool, it's called the Willing Wisdom Index. It is a really, really fun tool.
Nice. Well, listen, let's wrap it up there. I'll leave you with the words of a farmer who said to me, he went through the succession plan, took a number of years, and he said to me, he said, my succession plan, he said, will have been a success if after I'm gone, my family can still enjoy Christmas dinner together. And in many ways, that's really what this is about. And so I know we have packed a lot into this time together. And of course, not everything that you need to know. But the objective, as Tom has so eloquently pointed out, is to just get you started, get you to the first step where you have that first conversation. So thanks to you, Tom, for making all this happen today. And again, there'll be a big virtual round of applause for you right now. Thanks so much.
Thank you. Thanks for having me. Really enjoyed our conversation.
Okay. For those of you who are with us, a couple of things. For those of you still wanting to ask questions, and my apologies to some of you, I didn't get to all of your questions, you can still ask these of the Ag Transition Specialists. So for those of you who want to hang around and ask those questions of the Ag Transition Specialist, just hang tight for a moment. For the rest of you that are leaving us now, a few things. If you registered for the event, you will receive a link to the recorded session. It'll be valid for about a week or so. Feel free to share it with family or review it yourself. You're also going to receive a link to complete your own, as Tom just referred to, Willing Wisdom Index. And that'll come in the email, so you don't have to remember a website or anything. This tool is pretty helpful. I've had a peek at it, where you just gives you some traction to get started and get some next steps. You're also going to receive an email with an evaluation. Really appreciate your feedback on these programs. It helps FCC plan for future events, and such as the next one that's coming up in 2 weeks, Tuesday, January 26th. At 2 p.m. Eastern, Stephanie Holmes-Winton will be talking about your money mindset. So to register for that, as always, fcc.ca/events. A quick related announcement that Farm Transition Appreciation Day is being offered by Farm Management Canada and Farm Life Financial. And so if you're interested in even taking this further, you can join any of their sessions. In fact, I think there's one tomorrow, maybe. You can visit the Farm Management Canada website. I think it's FMC-GAC, FMC-GAC. If you just Google Farm Management Canada, you will find it. So on behalf of Farm Credit Canada, I appreciate all of you joining us, and make it a great day. And as for the rest of you that are hanging around to ask questions of the Ag Transition team, a reminder, what you do is you look under the main menu, and you'll find the words Networking Lounge. If you click on that, you will look for a room in your geographical area. And if it's full, just hang out for a little while. And I think they'll let a few in at a time. Again, thanks so much, and all the best.